EV startup Canoo teeters on the brink. Disgruntled employees allege zero production despite public claims. Stock plummets 90%. Canoo, once a bright star among electric vehicle hopefuls, is now teetering on the brink of collapse. Disgruntled employees at the company's Oklahoma factory allege no vehicles have been produced there in a year, directly contradicting public pronouncements, with top executives jumping ship, a plummeting stock price, and mounting losses. Canoo's future hangs in the balance. Is this once promising startup the next EV domino to fall? Canoo staff say Oklahoma facility hasn't produced any vehicles in a year. Firm denies. EV startup Canoo teeters over the edge. In the past 2 weeks, Canoo has furloughed 30 workers at its Oklahoma factory, lost both its CFO and General Counsel, and faced accusations from employees over alleged mismanagement and misleading production claims, while its stock plummeted over 50% to a new low of 37 cents. In early 2024, on January 17, the electric delivery van and truck maker announced it delivered the first units of its LDV 130 model to Kingby, a U.S. van rental provider. At the time, the company mentioned that the delivery event was part of a phased ramp-up manufacturing approach in Oklahoma City, where it has its manufacturing plant. However, recently furloughed workers from that factory disclosed late Tuesday that no vehicles had been produced at the facility during their employment spanning roughly a year. Local outlet KFOR reported, "There has not been one single vehicle that has been wholeheartedly produced here in Oklahoma," said a worker before going into details. "They don't have the paint body area up. General Assembly doesn't even have the full protocols on how to assemble that. It was still training for that. There's robotics which they don't have. A lot of them aren't even configured to run and operate," the worker added. Asked specifically about the January announcement, a worker called it false information, adding that the vehicles that Canoo said were made here in Oklahoma were not made here in Oklahoma. Those vehicles were produced in Torrance, California, shipped to Oklahoma where they had the VINs assigned to them in Oklahoma. That way, they can state that they were built here. There has not been one single vehicle that has been produced here in Oklahoma, the worker added. Following the report, a Canoo spokesperson reached out to the Oklahoma-based publication saying, "These allegations are false, consistent with the standards of the American Automobile Labeling Act AALA. Canoo proudly manufactures its vehicles in Oklahoma City for its customers in the U.S. and abroad. I just want the public and the Oklahoma taxpayers to know the truth about what's going on there," the worker stated, before adding that the EV maker still didn't reach out regarding the promised extension of the health insurance. Alliance Global Partners analyst C.K. Poe-Fratt released a new research note late Tuesday cutting the price target on the shares after the company announced the resignation of its CFO Greg Etheridge and the General Counsel Hector Ruiz. Additionally, the startup disclosed in an SEC filing on Tuesday that it has entered into a $12 million secured revolving credit facility with AFV Management Advisors, LLC, an entity founded by the company's CEO Tony Aquila. The analyst lowered the firm's price target on Canoo to $5 from $14 while maintaining a buy rating on the shares. Last week, the company announced it had furloughed 23% of the workforce, equivalent to 30 employees, at its Oklahoma plant as part of what it described as a broader realignment of North American operations. EV startup Canoo teeters over the edge, with its losses mounting and stock price tumbling. Canoo appears to be the latest EV startup to face the threat of collapse. The company furloughed 30 employees at its factory in Oklahoma, even as 2 more of its top executives resigned. Once one of the brighter prospects among a plethora of EV startups, Canoo is now struggling to survive. The company reported a sharp increase in losses for the first half in its latest regulatory filing, while its available cash continues to dwindle. The EV maker has now laid off without pay 30 workers at its factory in Oklahoma, even as it continues to lose members of its senior management team. The latest to exit, Chief Financial Officer Greg Etheridge and General Counsel Hector Ruiz. Meanwhile, shareholders continue heading for the door. Canoo's stock price falling about 90% over the past 52 weeks. That's leading analysts to question whether it could be the next EV manufacturer to fail after Fisker's recent bankruptcy. Up the creek without a paddle. Originally named Velocity, Canoo was founded in 2017 by Stefan Krause, the former CFO of Deutsche Bank, and Ulrich Kranz, a former executive at BMW. Both had gotten their feet wet in the EV industry while working at Faraday Future. As Headlight News initially reported, Canoo aimed to create a niche for itself with what it described as a vehicle using minimalist design that maximizes interior space. It eventually rolled out several body concepts, including a van and a pickup, but early problems, including product development delays and financial issues, led it to abandon the retail vehicle market to focus on commercial products, such as all-electric delivery vans. In mid-2022, Canoo warned investors that it had substantial doubt it would have the cash to launch production later this year. A lifeline unravels. It appeared to have grabbed a lifeline. However, when Walmart placed an order for 4.500 LDVs, or lifestyle delivery vans, in July 2022, Canoo saying the mega retailer had the option to purchase another 10.000, with $100 million in potential tax breaks and other incentives. Canoo launched production at a factory in Oklahoma a year later. But things haven't met expectations. And Canoo has revised its 8K filing with the SEC to show a net loss of $117.6 million for the first half of 2024. While available cash and equivalents have dropped to $4.51 million, down from $6.39 million a year earlier. And a number of suppliers have gone after that cash, alleging unpaid bills. Canoo now anticipates full-year revenues will come in between $50 million and $100 million. Analysts had forecast around $152.5 million. According to a consensus gathered by the London Stock Exchange, is the end in sight? That has investors growing increasingly nervous. Shares fell as low as 39 cents early this week before bouncing back to 43 cents at the end of trading on Tuesday. Company officials have tried putting a positive spin on the latest job cuts and executive departures, suggesting Canoo is in the midst of supply chain harmonization to prepare the company for the next phase of growth. But there is growing concern that the company doesn't have much of a future left. The end is nearing, warned a report by stock research site Invest.com. Canoo would be just the latest in a string of EV startup failures, such as Lordstown Motors. The most recent is Fisker, which recently received court approval for its bankruptcy plan. Still other once promising ventures, such as Faraday Future, are barely hanging on, with few expecting them to be able to survive.